weekend as if you wish. So as always, we're trying to give you the best that we can, the best help that we can. So I'm here today to help you with anything you want, to go through the charts, check what's going on around, and I'm here to help actually. So let me just let me just check that you can hear me. There is no issue, just to confirm from my colleague. Okay, live on YouTube, perfect. Live on Facebook as well, excellent. So, okay, now that's perfect. Okay, so everything is ready. I would like to welcome everyone. We decided to give this live streaming prior the jobless claims. You know that any kind of labor market, any kind of labor data in the US, in Europe, it's key for actually for give us a hint whether the recovery eventually in the global economy is nearby, how fast that will be, and when that will be. So we have the labor market data, especially for the Fed, is something that they have as their priority, to keep an eye on the unemployment. So that's why today's data are extremely important, especially after last week's data, okay, in which we have seen actually a bit of unexpected spike. And so this week, so in less than 30 minutes time, we are pretty much expecting the jobless claims to come around 30, to see drop again at 33,000 decline in initial claims to 760,000 for the week ended February. So after, of course, that drop that we have seen last week to 793,000. So the data actually this week are taking an extra, if you prefer, scrutiny, okay? Because it's as every week it's an indication of how the NFP number will be, and also is something, as I mentioned, that Fed is really keep a close eye on. So of course, as we have on the background, the claims remain elevated, resulting from the slow reopening in the US economy. Okay, so all those, if we consider all those extended unemployment benefits that the US government is giving with the December relief package, and due to the disruption, the disruptions that we've seen, the claims are extremely important in order to give us an indication of the February's payroll, whether we're going to see a rise or not. So, other than that, we have so far seen today ECB monetary meetings. As always, any kind of central banks meetings give us a hint on any potential action that they are about to take. So this is what we have seen actually from ECB today was nothing really different of what we have seen the past few weeks and months. So ECB in this last meeting minutes attracted a bit of attention. However, there is nothing really particularly important. The central banks remain lower for longer, and they will continue to try and halt this sharp rise that we have seen in yields by planking some kind of ongoing support. Okay, even though the risks in the economy are still there. Okay, so let me double. So I am okay. YouTube is working just fine. Perfect. I can see already people arriving in Facebook as well. Excellent. Hello, Samit. So before we start, I can see your comments, guys. No worries. I will get back to you in regards to someone is asking about gold. Hello, everyone. So, okay, perfect. So before we go through the charts, okay, I would like to do a quick briefing because especially this week, even though it's not something new, we have seen a lot of attention into stocks and bonds, okay, and this is important because this is what drives all this madness, if you prefer, is the reflation trades are, as we call it. So before we have another 20 minutes to go until building permits, housing starts, and jobless claims. So I will do a quick briefing and then I will switch fast to the MT4. Okay, so what's the theme right now? Okay, what's this theme right now is actually the softer dollar, and this is due to that mixed markets that we have. But the focus, as we keep saying, is on bonds. And why is that? So let me take it step by step. So what we have seen so far is that stocks and bonds are like mostly lower, okay, and even though in the near term they look a bit consolidative trading, and this what explains this shift lower, okay, is the reflation trades, okay, that helps Bitcoin going higher, help a bit commodities as well. We have seen copper higher, other industrial metals like platinum, palladium, aluminium, and slight appreciation of gold, but as well, but not so significant. So, what's actually driving the reflation trades? Just to clarify over here what reflation and trades means. So reflation trades means that eventually is when the people, the market participants, the investors, if you prefer, are actually trading on the expectation, okay, that the inflation will go higher, on the expectation that there will be eventually a recovery story in the global economy, and that is something that um, that cause the bonds drifting lower with 10-year yields, if I'm not mistaken, back to last February's territory. So a year ago, remember, February is a pre-pandemic month. So we are reaching pre-pandemic levels. So this is something that it has been observed for the whole week. Okay, so stocks and bonds mostly lower, okay, due to that reflation trade, as we call it, boost commodities and metals more precisely. And on the flip side, we have seen oil spiking higher. We have seen all the dollar crosses also slightly lower, and dollar settled back to below its highs. So the dollar so far today is slightly lower, and this is because the global equity market have come off the boil. So we have some pressure on stocks, and some important stocks like tech-heavy stocks like US 100, Nasdaq, Dow Jones, US 30, S&P 500, but in general, tech stocks as well. So we have seen a bit of a boost the downside in the stock markets, in the tech stocks as well. This is in the face of a lofty valuation. So the reflation trade is still there for the whole week and remains there, kicking in commodities. with copper and, as I said, more of industrial metals, base metals, searching to fresh multi-year high. So the first things that I would like to see with you today is the base metals, the bonds, the bond as well, the bond industry, and later on the uh, the currency market. Okay, so this is the theme so far, and it is expected to remain the theme. So reflationary trade is something that you should really take care of. Okay, because by having a rise in the yields, okay, fueled by these reflation trades, which, as we said, suggest that is the people's anticipation for a higher inflation. But if we were seeing market yields actually spiking higher, okay, so bonds under pressure, stocks under pressure, this is something that fuels the concern that a pickup in borrowing cost could undermine corporate profits, especially because of the jump in oil prices as well. So oil has benefit on these reflationary trades, along with OPEC cut, the concern about Texas and that disaster that we have seen in Texas. So demand also in focus. So that's why oil has clocked a new 13-month high. Okay, so I will speak about oil in a minute. Okay, so just to make sure that I haven't missed anything that I should that's considered to be important for you. So summary. Okay, summary. Global equity markets have come off their highs for the moment, okay, but commodities have rallied, so remain on the upside. Treasury yields, US Treasury yields remain lower off their recent highs. Okay, dollar softer, a bit sideways, but a bit, as I said, recently re-established a correlative link with treasury yields, and especially the differential between bond yields and other peers. Okay, so the magnitude of the recent sharp spike in the US yields become too much to ignore for market participants. So even allowing for a relatively high inflation rate in the US in comparison with Europe and other countries that they have negative interest rates and they even sustain that lower for longer policy. So we can see that there is some kind of a relatively high inflation rate in US if we compare it with the other major economies. Okay, so I will start with the US 10-year future. Let me just showing you my let me show you my MT4. Sorry, just it's a bit confusing. Okay, I can see your questions, guys. Give me some time, okay? I want to cover base metals, as I said, 10-year future, oil, because oil and Bitcoin, these four groups are in focus this week, and later on we could shift to the currency market, like you are asking me. Hello from Mexico. Hello from Pakistan. Glad that you're here, guys. Okay, excellent. So I would like now to show you my MT4. Perfect. So over here we can see the US 10-year future. Okay, so this is a monthly chart, so what about it? I wanted to put that on because it clearly shows you that it's back to pre-pandemic era, pre-pandemic period. Okay, that's why I put that on. So Perfect. So we have seen that is especially in February we had a big monthly candle. Let me put the weekly chart as well. But we have a big monthly candle, bringing the asset back to March 2020 area, but also on the 20-month moving average. So that's a crucial support area for US 10-year futures. Okay, bring it back. This is a strong, three continuous strong bearish candles. So if I flip back to the daily chart, you can see that there is some kind of a continuous descending channel over here. Okay, since the 2020 where COVID started. So what is key is to understand that this is not on the benefit. Sorry, I've done something wrong, I think. Okay, so this is not something that the central bankers are really they really want. Okay, so this situation, the fact that the 10-year yield, the treasury yields are really rising, so that caused bonds to flip lower, like the 10-year that we're just seeing, the stocks flipping lower, the dollar a bit softer. So this is not something that the central bankers are really keen on. Okay, so they are trying to control these rising yields. Okay, so as if you're following our analysis page, you might already seen an article that we have posted. I'm not sure, it was yesterday if I'm not mistaken. So so you should be aware, guys, that as I mentioned, what the central bankers are really keen on is to somehow control the yields, the rising yields. Okay, even though the rising yields suggest cheaper currency, and that could boost the economy, could help the economy. But on the other side, there might be an issue in regards to the corporate profits, as I mentioned. So this is why the U.S. treasuries are back into a lot of interest. So just to give you just to explain in a very simple words, central banks, okay, are expected, and they should actually remain lower for longer, because we're still facing a lot of downside risks ahead of us. Okay, so that's why keeping keeping on the one side the policy is lower for longer, on the other side boosting the economy with massive fiscal stimulus, like the US, with Biden wanting to finally confirm a 1.9 trillion fiscal stimulus package. The central bankers are really eager to stress, that they won't start to change anything in the monetary stimulus anytime soon, and they will keep fiscal stimulus underway as well. As long as long as the long yields, and if they do that, actually, this means that the long yields will continue to trend higher. Okay, so they are really keen to control the situation. But I spend a lot of time on this. I should really turn to the actual MT4, because otherwise this live will get a bit boring. So So, as I was saying, guys, this is something that weighted weighted on the stocks and bond markets, but boosted commodities. That's why I will quickly shift to gold, since it was the very first question that we had from Mr. IT Shenko. Tell us about gold, please. Okay, so of course, gold wasn't the one that benefited the most on the rise in treasury yields and on the lower bonds, but it found some appreciation as well. So we have seen. Let me just quickly put that on. Before I do that, let me quickly show you palladium. You can see that it rebounded in February from that triple bottom that we have seen the last uh, 6 months in a row. Copper, you can see a spike in copper, even broke this actually more than 7 years territory. So it spiked, it get back to, it broke 7 year support, the 2013 support, 8 year support actually, and is now extending further higher. So copper is is the biggest beneficiary, is the biggest gainer from the yields rise and from the bonds decline. So really in copper, the next level to be seen should be these highs back in 2020. So $4, okay, $4 or even higher at the 161 Fibonacci extension 4166 should be right. Let me put it exactly. 4149, so there is rounded up 415 level. So this is the key resistance levels for copper. You can see this is a monthly chart, and you can clearly see how the price has been more than doubled since 2020, since 2020. That's why copper considered to be maybe the number one gainer from pandemic. Okay, platinum also continues to the upside. It's just to give you an idea why we are saying that commodities have kicked up. So let me flip to gold, since Shenko asked for it. But you should really um, sorry, how can I do that? Yeah, perfect. So now you can see me as well. So you should really turn your attention to other commodity currencies other than the precious metals. Don't ignore the other assets. Keep an eye on everything if you can. Like, scan it every morning. It will help you with your trading, with your understanding. You have to have an overall view of what's going on in the market. So, okay, this is the daily chart for a gold. Okay, but as we have seen, actually since yesterday, there is some kind of an appreciation, not significant. It's above, it's 1768 level, bounce higher to 1789, well below the 1800 territory, which is a key level, a double zero level, so key level to be seen. So we have seen some kind of a consolidation of a rebound, but you can see that in the near term, at least this is the 1 hour chart, we are facing a lot of we're seeing a lot of sideways movement in a ranging market, with momentum remaining negative even in the 1 hour chart. So it has increased, suggesting that the negative bias was decreasing slowly, but it remains below its zero line. So unable to break those highs and the 50 period moving average. So the near-term outlook, even the near-term outlook and the intraday outlook, there is a lot of negative bias. So if I shift to the daily chart, you can see that the bounce today wasn't significant and remains very, very close to yesterday's lows, but also to the 4 months low territory. So the Bollingers in the daily chart keep extending lower. All the moving averages are pointing lower. There is, if you see the MACD as well, you can see that it's still extending further to the downside with RSI also below pivot, below 50 zone, close to 30, trying to slope higher, but it's a bit flat right now. So you can see that even in the near term and in the 1 hour chart, in the near term and in the medium term, so daily 1 hour chart, the outlook of gold remains negative. So let's put some pivot points on and get back to the 1 hour chart to see where we are standing. So as you can see, the asset is above its pivot, but is struggling to break the first resistance of the day. And as I said, momentum is still negative. So this rebound earlier looks to be some kind of a correction on this long decline that we have seen for gold for nearly for more than, actually, if I put the for more than actually nearly a year, not exactly a year, since August. So that brings us to more than 8 months decline. Okay, the fact that it has broke below the 50 simple moving average, 50-week moving average since the first week of February. So it closed below it, tried to recover, remains very close to it, but in this week it has sharply drifted further down below the 50-week moving average, suggests that there is a lot of negative pressure on gold. Hopefully that helped you, my dear Asdishenko. You asked twice, so I reply. Hello, Dada Prasad. Glad you're here. Ask anything you want. So you mentioned about cable. Okay, let's shift to cable. And I will come to it later on then. Let's shift to cable. So let's shift to... Okay, here it is. Okay. And I'm glad that you asked about cable, because we have seen a nice bounce just now, actually. Just now. So we have the fact why we're seeing this bounce, guys, okay, is because the pound has been the strongest currency so far today, and the dollar has been the weakest. That's why we have more than 3% rise in the cable so far today. Okay, so a pound, it's the biggest mover indeed so far today, and that's a good call from Dada Prasad. Okay, and the reason for that, is the fact that other than the US data, which I will come to that in a second, okay, is due to the news. I don't know if you're already aware of them. It's due to the news that the UK, okay, of course the Brexit is out of the way. The UK completed Brexit by leaving its transition membership of the US Common Market and Custom Union. But there were some news earlier this week that the UK government is really it's ahead of the schedule in regards to the vaccination. So it's ahead of its schedule. It's a target to vaccinate the most vulnerable groups of COVID, the elderly ages, the most vulnerable people in the UK, have given markets some kind of a reason to be bullish on sterling. This is what we are seeing along with the dollar weakness so far this week. So the fact that they have managed to, they are ahead of the schedule, the vaccination program schedule, um, is something that could be described as a grow out of historically weak trade-weighted valuation with 4.5 years of Brexit uncertainty, which is finally over. Remember, the voting was back in 2016, so we are finally over of that Brexit uncertainty that we have seen the last 4 years, more than 4 years. So this, along with the fact that they have announced that they are ahead of their schedule, is something that boosted sterling, is remaining bullish. There is boosting sterling ahead and against every single other major cross, other than any other major currency. In contrast with the situation in Europe. Okay, so the Europe is not doing that great in vaccines, so that's why we have seen euro pound shifting lower, because we have pound strong, euro weak. Okay, so this is something that keeps pound broadly underpinned and is expected to continue this way. Something that I also wanted to share with you is there. Actually, I need to show you also the economic data that just came out. So let's quickly shift to that, and I will get back to you, Dada Prashad, in regards to the sterling and why we've seen this bounce. But let me quickly share with you the calendar. Hopefully you can see it. Perfect. So the data are out already. Built-in permits higher than expected, 1.88 for January, higher than the previous reading, with the previous reading, however, revising lower, but ahead of the forecast, above the forecast. Housing starts, unfortunately, lower. They haven't remained, they missed expectations, 1.58 in contrast with the 1.65 millions that the markets were really keen on. Jobless claims rise more than expected and even higher than the previous reading, and the previous reading has even revised higher. So remember, initial jobless claims are the people that are filing a claim because they are unemployed for the first time. So what that means, it means that on the week ending February 12th, more people are unemployed, are without any job, and they have claimed, they have applied an application, they have submitted an application for receiving benefits. Okay, so that's a bad reading for US. Okay, and I wasn't sharing with you the actual calendar. My mistake. Sorry. How can I have? Okay, perfect. So can you see that big miss in jobless claims? Well above the expectation, 100,000 higher than expected, with the previous reading revising higher. So that should be very, very bad for dollar. If the labor market is showing more unemployed people, okay, more jobless claims, that means more unemployed people. This is bad for any economy, not only the US. Also, we have seen a slight spike, but still higher reading on the continuing jobless claims. So people that they were already unemployed without any job, and they had already applied for claims, they continue again to file another claim for this month as well, for February as well. So another bad reading for US, something that weighs significantly on the dollar. Philadelphia, again, a bad reading. It might be higher than expected, but it remains below 50. And as long as it remains below 50, it suggests contraction, recession in any single economy. So let's see what happened with the dollar. Okay, and since you asked about cable, let's check cable then. Okay, perfect. Okay, guys, was a very bad reading. So that's why the cable extended its gains on the US release. Even though we have seen a spike in the cable since this morning. Excuse me for a second. I have already explained the reasons why pound benefited and saw some this kind of spike. This is a news in regards to the vaccination. Is the weakest dollar that it keeps holding in the low territory. But we have seen that the mist on the US jobless claims gives further boost to cable, and that's why it's shifting and boosting further to the upside. So this is the 1 hour chart. Okay, this is the 1 hour chart, and we have seen that. Let me reset my pivots because it was for a 30 minutes chart, so you can see that it managed on the EU Open to spike and break the first resistance of the day, and earlier today it also broke the second resistance of the day. So the next resistance to be seen is really at 139.80 or even the 140 territory, which is a round number, triple zero number, key psychological level, and that could, if that's hidden, it could, let me just zoom out a bit, you can see that these are levels that have never been seen since January 2018. So it takes us back to 2017 territory. So 140 key level to be seen, key resistance to be seen for cable. This is the weekly chart that will shift back to the 1 hour chart. Let's see whether this boost, this rally is running out of steam. As you can understand from the candles, they are quite strong. Even though the previous hour we had tails below and above the candle, however, the bodies remain quite decisive. And even though it's trading outside the Bollingers, suggesting overbought condition, the momentum, the bullish momentum still holds. If you have a closer look on the MACD, you can see Peter also, hello from Mexico, hello. Peter also asked about cable. As you can see, MACD is keep extending above zero. And what's significant for me, guys, is that bullish cross that we have seen in MACD. Can you see that it's just broke above zero as well? The signal line broke above zero. So we have a bullish cross on MACD, suggesting that there is further steam to the upside. And you can really see that because it just broke the third resistance of the day. Okay? So, and it's keep boosting higher. So there's a lot of buying pressure, a lot of buying beats on the cable. That's on dollar weakness, along with the fact that pound has been the strongest currency so far. So it has managed to break February's peak, but nonetheless it takes us back, as I already showed you, to 2018-17 high territory. So a break of 140, just for you to know, this is a weekly chart. So a break of 140 could turn our attention to highs that we have not seen since 2017. And you can say, Andrea, why? Uh, it might be overbought already. Look at that. This is a weekly chart. And we have seen the weekly momentum going higher and higher and higher and higher since September. And it's not really turning it doesn't give any signal that is reversing lower. Instead, this slope is pointing higher and higher and is extending. And nonetheless, RSI just is on the 70. So there is further steam to the upside for RSI. It's not overbought yet. Okay, at least for the long term, medium term. This is a weekly chart. Now we will quickly shift to daily chart. You can see that it's still the same. Rising MACD, rising RSI, ready to cross 70, so it's not overbought yet in any single time frame. Now, for those that they are interested in a near-term picture, the first and third resistance of the day already broke, so let's shift to the 30 minutes chart. This is the 30 minutes chart. We might see some kind of a correction. We need some kind of a correction because it's overbought, but this, as long as you don't see the asset getting back to the 50% to the midpoint of this rally, so 139.15.10, then the asset remains positively configured with outlook in the near and the medium term and the long term still positive. That was for pound. Hopefully it helped you guys. Okay, Peter, unfortunately the result didn't favor US. Okay, sorry, I missed your question. I should have replied earlier, but you should know that any results for any country that they missed expectations and significantly fall below expectations, but even worse, below the previous months or weeks so data, this is something that is bad for the currency. Okay, it's something that is bad for the currency. And in this situation, since we have seen that the unemployment, the jobless claims rise, so US has more unemployed people right now, this is bad for the dollar. So weak dollar, strong pound, then pound is shifting higher. Weak dollar, stronger euro in comparison with dollar suggests rising euro. And since you mentioned euro, I will flip to euro right now. So euro, okay guys, the fact that euro is benefiting against dollar, it doesn't mean that Europe is doing great, is getting back to a recovery. No, it just means that US is doing worse than Europe. Okay, so we have seen, you see on the data, this is 1 hour chart, you have seen a spike on euro, or in euro dollar, because of the data. But before, we could have seen a decline on euro dollar. And why was that? Because the fact that euro dollar drifted to 10 days lows had to do because of the sorry, I'm running a bit out of steam. Is because of the spike of the US yield. So the magnitude of those recent sharp spike in the US yields, which was too much, as I already said and taught you, allowed actually for a relatively high inflation rate in US in comparison with Europe. That's why we've seen a flip on euro dollar in this 1 hour chart, but also, if you see, for the whole week, some consolidation and then a dip. This is the daily chart, okay? Um, so this, along with the fact that we are expecting from US a massive stimulus, along, of course, with the Fed minutes that we had yesterday, is something that weighed on the euro this week, but boosted slightly dollar. Now this is completely reversed. Now we had a bounce higher of euro dollar because of dollar weakness. Okay. So now intraday in regards to euro dollar, let's see what's going on. As I said, it's still despite this bounce, it's still very low. It's still very close to the 10-day low at 120.23 territory. That was the 10 days lows. Okay, so let's see. So is well off its lows, but remains below 20 and 50-day moving average. So for the daily chart, in the daily chart, the euro dollar remains mixed, remains neutral, without any clear direction. Okay. We need to see a decisive spike of 20-day moving average, but more precisely, a decisive break of this area over here, because this is a key resistance area, the 121.50, which has held nearly for the whole 2021. So only break above it could open the doors back to 2020 high territory. So for the time being, the asset remains lower. Okay. So that's the daily chart with a momentum indicator such as MACD still very weak. But the medium-term picture, more or less, is neutral, is without a clear direction, because RSI is at 50, MACD is below 0, and very choppy, weak histogram. So the asset is well below its highs, below all moving averages, the 50 and 20 moving average. So we don't have a clear direction in the daily chart, in the medium-term picture. Now, in regards to the 1-hour chart, we have seen a nice rebound, breaking the 20-period moving average. Let me put my intraday setup over here. Breaking the 20-period moving average, moving above its pivot point since this morning, retesting the first support of the first resistance of the day, but nonetheless, what is key is those lines over here that I have, the 5 and 9 exponential moving average. So these are short-term exponential moving average, which they could be using short-term time frames such as 1 hour or even 30 minutes chart. So the fact that they point to the upside suggests that there is further steam to the upside for the next few hours, the next 30 minutes, and so on and so forth. So for the near term, short time frame. So it already retested first resistance of the day. So for the time being, key resistance, if it managed to break that level, will be the 120.95. So it will be, if it managed to break that level as well, it will mean that it has recovered the 50% of the losses that we have seen this week. So that could turn our attention to higher, to 121, 121.30, or even the high territory that we have seen this week. So RSI keeps slightly lower, so there is some further steam to the upside. Let's check the 30 minutes chart though. So sideways, up, but it's still failing to break the first resistance of the day. As long as you don't see a decisive break above it, this first resistance of the day could be a retracement level. So we might say pullback. If it doesn't manage to break it, a pullback will suggest the retest of the pivot point. That was on euro. Anyway, the data were negative, so they could sustain a bit of a sentiment to the upside. Aussie, okay. So Aussie, here we are. Okay, here is the daily chart for Aussie. It has managed to recover and to get back to December 2020 territory. As you can already see, overall the commodity currencies like Aussie, New Zealand CAD, Canadian dollar, they managed to have a strong rally during the pandemic. So despite the pullback in January, the asset managed to recover and has sustained a move above its 50-20 moving average and very close to the high territory, the high 3 years territory. Now, let's shift to the 1 hour chart. Let me put my setup on. So it has broke the first resistance of the day and is moving a bit sideways since then. So some ups and downs, suggesting that the intraday outlook, the 1 hour outlook, the intraday outlook is in a consolidative. It's in a consolidation mode, the ranking market. So So a bit of a neutral zone over here, a break and a closure at the bottom of the hour, the top of the hour, sorry, below the first resistance of the day could turn our attention lower to that triple bottom at the pivot point. But for the time being, is really, really neutral. You can see that even the fast moving average are pointing to the right hand side, so that's sideways movement. Let's see the 30 minutes chart. This is the 30 minutes chart. So up down. So currently is down. Oh, here it is, down. It delayed a bit, but it's down and ready to hit again the first resistance of the day. But it's a bit sideways, even though we had some higher highs over here, but not really clear. Okay. No, it's not a descending or an ascending triangle, so it's not clear what it is, but a break below resistance could retest the pivot point. For now, we cannot really tell whether it could continue upwards because we have a pullback of the fast MAs, of the RSI, of the MACD, suggesting that there is pressure to the downside. This is a 30 minutes chart, just to clarify. But the long-term picture remains relatively high and relatively strong, as long as the asset doesn't move down to these lows over here in the 0.7720 territory. What you didn't understand, my dear Sina, let me explain you again. Dollar yen, is it going down? What's your take on? I can't really tell what's my stop loss and target, but I could analyze dollar yen so you can decide yourself. So dollar yen, here it is, perfect. Okay, as you can see, let me put a regression channel on. As you can see, dollar yen has been in an upwards channel with ups and downs, but upwards channel with higher highs, higher lows since the beginning of the year. Okay, so the dollar yen, sorry, the dollar yen remains more than 3% higher from the year-to-date levels. Okay, and this is clearly corresponds with the pronounced widening of the U.S. Treasury over the Japanese yields differentials over time. So as long as we've seen Japanese yields and U.S. Treasuries having a big difference between them, okay, so we say that there is a widening of the U.S. Treasury over Japanese yield differentials. As long as we are seeing this difference to get wider and wider, this is something that suggests that dollar yen could continue higher. Okay, so weaker yen against dollar. Right now, the difference that we have is has been more than 35 points. So as long as treasuries continue to have a huge difference between them, the Japanese and the US ones, then the wider, the higher the dollar yen could go. Okay, so that's in general the overall picture, just for you to be aware what is actually supporting dollar yen. Why we are saying that dollar is weak overall, but yen is weaker than dollar. That's why we have seen that dollar yen is shifting higher. Okay, it's because of the differentials between the US treasuries and the Japanese yields. So, okay. However, of course, they are still high this week, but we have seen today and yesterday as well shifting lower. Okay, so dollar yen right now, sorry, dollar yen right now is at the 105.60. So it's very close to the mid level of my regression channel. Okay, so a break of this level, so a break of the the 105.55 territory, so a break below it could open the doors to a retest of the low trend line of the regression channel, similar with what happened here, similar with what happened here, and so on and so forth. So, however, we need to see a break of that trend line, okay, of that regression trend line. So, this is the daily chart. If, however, it sustains a move above it tonight, it closes above it tonight, or even tomorrow, then we could see another shift to the upside. So you need to monitor a bit the dollar yen. But overall, you should be aware that the overall picture is positive. It is an upwards channel, okay, with momentum still positive, you see? Positive MACD, bullish cross, RSI above 50, even though it's slightly lower today, so just confirming this pullback, okay? But just keep in mind that if we need to see a decisive break of this trend line of 105.50 in order to suggest a retest of the 105 territory, the lower trend line, okay? So, intraday now, it went lower since the beginning of the week, nearly actually since Tuesday. Lower. It remained the whole day today below its pivot. It even broke the first resistance of the first support of the day. So if I zoom out a bit, you can see that it crossed earlier below the first support of the day. MACD has crossed negative. RSI, however, remains above the 30 area. So, and the fast MAs are not really aggressively pointing lower. So what that suggests, what that tells us, okay, it was under pressure today, but is this decline running out of steam? This is what it looks like, because RSI is not oversold yet, and nonetheless, if you closely look, it had a slip, but now it's turning back higher again. MACD turned lower, but not significantly. The signal line is very, very close to zero again. But nonetheless, the fast MAs are not pointing down, they are pointing right on the right hand side. So we might see some consolidation or a possible turn back in this area, in this range, the 105.70 to 105.90. So take care, because indicators suggest that this decline might run out of steam. We need another, we need we need we need we need further more volume, more bigger candles, or even a shift of RSI lower. Let me check the stochastic just to see whether it has actually so stochastic, let me switch my stochastic, sorry, I put it twice. Stochastic are already turning lower, so this is my near-term indicator. So it's already having a bullish cross, suggesting that it's turning back slightly higher, but there is not a sharp rally. So yeah, so consolidation. This is the same for the 1 hour chart, but overall remains positive as long as it doesn't break that level. If it does, next key resistance support area will be that trend line at 104.80. If it touched that level, it's expected to rebound higher again because it's in an upwards channel. So now let's continue. Dollar. Okay, I don't have that on. I will find it right now. So give me a second, please. I'm not sure that we actually I'm not sure whether we actually offer it. No, can't help you with that. I don't know if you're trading with us, my dear Vishal, but yeah, that is not available, or at least I cannot really see it. Yeah, so okay, let's continue. Thank you for your nice words, FX market strategy. Okay, I see. Thank you very much. Okay, let me flip to let me just check whether there are any more questions. So a lot of spams. Okay. Thank you, guys. Thank you. Hopefully this analysis helps you. Hello from Philippines. Oh, nice. Muhammad Usman asked earlier when I initially started the session in regards to the dollar, to the S&P 500. Sorry. So S&P 500. Let me check. So S&P 500, guys. Quickly. S&P 500. So here we are. Sorry, the PC doesn't really help a lot. I'm not sure what you can see right now, to be honest. Nothing. Oh, God. Sorry, something wrong with my... No, that's not... You could see, not yours. Sorry, something wrong with the screen sharing. Let me... Application MT4, here we are. Perfect. Okay, we are back. Okay, perfect. So S&P 500 is something that, but I need to check your questions as well. How can I do that? Let me shift it to here. I will close YouTube for now and keep the calendar. Perfect. So MT4 on. I think you can see it right now. You should at least. So S&P 500. As you can see, the last 3 days, this is the daily chart, we have a bit of a flip lower of the stocks. Pressure, as I said, I started and saying today that we have pressure on stocks, pressure on bonds because of the rising yields, okay? That was due to their inflation dates. So S&P 500. S&P 500 lower for 3 days in a row, but well into this range that we have seen the past more than 10 days range. So the bottom at 38.80 is still, it has still been sustained. Okay, so S&P 500, not Nasdaq. In general, the US futures have seen some kind of a slow, some losses, given the pickup inflation expectation that have boosted bond yields, and that's why we have seen bonds under pressure, yields higher, stocks lower, and dollar initially in the beginning of the week higher, but now has settled lower. So lower, but remains within this range. So overall, you can see that in an upwards movement, right? Upwards movement to record highs area. It's really sustain the gains that we have seen at record highs. So only break of this floor at 1880, or even more precisely, if you prefer, below the 20-day moving average, okay, at the 38.50, so it's below the 20-day moving average, below the resistance that we have seen in the last quarter of 2021, but also coincides with the 38.2 Fibonacci retracement since the rebound that we have seen in January. So this is a key support area to be closely seen in case that the asset exits this range. But there is nothing that points into a reversal in the long term for the stocks. We have been more than we have seen since October 2020 a nice rally, some correction due to the overbought condition, but continues in an upward trajectory. So overall, a picture, long-term picture, remains positive for stocks in general and for the USA 500. Now, in the 1-hour chart, because I believe this is what you're asking me for, we had a big dip so far today, extending losses. So if I quickly let me clear a bit this mess. So if I quickly add my Fibonacci extension based on the initial dip that we have seen on Tuesday, we can see that the asset is back to yesterday's lows, even broke yesterday's lows, right? So based on the extension, the Fibonacci extension, come on, next support area to be seen will be the 3833 territory. And if you remember, this is also my 20-day, isn't it? This is the weeks. Oh, sorry. This is the weeks since last week's bottom, more than 10 days bottom. So this is key support to be seen now that the asset broke yesterday's lows and is extending lower. Look at that. So dipped ahead of the US Open. So 3 consecutive negative candles, breaking yesterday's lows, breaking the first support of the day. Fast moving average are aggressively lower, broke even the 50 period moving average, and is keep extending outside Bollingers. So that suggests that there is further steam to the downside with key support at that low over here, okay, and the 127 Fibonacci extension. So this is key floor to be seen as the asset extends tails to the downside, with RSI falling below 50 at 35 for the time being. You cannot see it. Let me extend it. 35 and keep sloping lower with further steam to the downside, and the slope is looking to the downside as well. So keep an eye of how strong this candle will be at the top of the hour. So look at that. 1-hour chart, close below Bollingers, keep extending lower below Bollingers, fast moving average aggressively lower, RSI ready to cross 30, MACD, which you cannot really see, but I will put it again, is negative, stochastic, let's see stochastics as well. Stochastics, also lower, okay, and there is some space to the downside still, they are not overstalled. So, yes, Muhammad, there is further pressure for stocks, unfortunately. It broke the 39 level, which was yesterday's lows as well. So, there is a key support level to be seen, $20 lower, 20 points lower. A break of it, as I said, could bring back to our attention the 3850, which was key support area because it's below the 20-day moving average and it's a key resistance area seen back in January. So keep an eye on it. Let me check other questions. I have covered gold. I don't know whether you missed that Feji Raw. Okay, Feji Raw. As we said, gold in a long, near more than 7 months decline. However, what's key is the 1761 floor over here. However, the fact that this keep extending below the 20-day moving average since the November extending lower, and the fact that he crossed the 50-week moving average this week suggests that there is a further pressure, negative bias for gold. You can see this, the daily chart is keep extending lower, breaking last week's 2-week support territory, keep pushing lower, MACD negative, RSI negative. So there is further steam to the downside for gold. This is the 1-hour chart. It faced some kind of a consolidation today between the pivot point of the day and their first resistance of the day. So overall picture negative for gold. Intraday picture 1-hour chart consolidation. We need to see that a clear decisive break of this double fractal over here at 1778 or a break of the first resistance of the day in order to have a clear direction. But for the time being, it's just consolidating between the pivot point and the first resistance of the day. And that was on gold. Okay. We have seen gold, my dear Ali. So I cannot see any further questions, I'm afraid. I'm not sure if I'm mistaken. I will double check. No. Okay, guys. Before I call it a date, as I promised, I want to see with you Bitcoin and oil and explain what's going on in oil. Okay, so let's flip to oil. Okay, this is oil. This in a daily chart, you can see that it continues this upwards trajectory, and nonetheless, it managed to break 60 territory, to sustain and move above 60 territory. That brings us back to areas that we have seen in the pre-pandemic in the pre-pandemic season, back to 63 territory. So the next, there is the fact that they managed to break the 60 and the 61 territory, moving further to the upside, brings the next resistance areas back to 2000, to the pre-pandemic period. So 63, even 65. So as long as the momentum remains strongly to the upside, these are key levels to be seen for oil. Okay, because there is a lot of boost to the upside. The asset remains well above its all its moving average. 250, 20 crossed in January above the 50, bullish cross. MACD keep extending higher. RSI is at 76, and there is further steam to the upside. So it's not over yet, with a lot of positive momentum being suggested by momentum indicators. Now, in the 1-hour chart, in the 1-hour chart, I have the calendar on, my mistake. So in the 1-hour chart, but in general this week, you have seen a lot of boost on oil. Because of the news in regards to Texas. So let me take it step by step. The fact that we have OPEC cutting production, okay, is something that supports the oil, of course, okay. But this week we have seen that the central southern US, due to the cold, to the freeze, to the weather, they have closed temporarily a very big part of the country's oil and gas operations. This is due. So they have cut a big part of the oil and gas operations. Okay, While on the other side, on the flip side, we have also an increasing demand for oil because it's cold. People want to get warm in their houses. There is a lot of demand. Okay, so this is something, the increasing power demand, the temporarily close of oil and gas operations in US is something that supports the oil, that supported the oil this week. Okay, taking a step backwards and think about a bullish supply gap hypothesis that has become a fashionable view. Okay, so we are anticipated strong oil prices because of the reflation trades as well. Okay, because we have COVID vaccine journey towards back to normality on, and all the countries, all the world is vaccinated slowly, some slowly, some faster, like Israel and Emirates and UK are doing good there, vaccinating people. But in general, we have the vaccine and people are vaccinated day after day. So we have the anticipation that eventually people, the pandemic will get over, and we're gonna eventually get back to normality, and not only normality in our lives but also economic normality. Okay, so we're gonna recover eventually, even though that's not the case. We're not expecting that to see in the 2021, but next year. So we have that hypothesis, bullish hypothesis for oil on the background. In the near term, we had the temporarily closed oil and gas operations in the US, but on the same time, we had a lot of demand due to the weather. On the other side, we also have the OPEC cuts, which are helping oil. Also, in the near term, the US and the Yemen civil war doesn't curtail, so it will be a question of rising US supply and weakening quotas discipline among OPEC plus nations before global demand will be restored to pre-pandemic levels. So just to summarize a bit, in the long term and in the near term, okay, the oil is expected to remain bullish. The oil is well positioned, okay, in terms of demand, in terms of unexploited reserves, in terms of any potential demand increases. These are all in play. So, and these are helping oil, okay? So that's why we have seen a continuous rally of oil despite the Yemen civil war, despite the tension that there is between US and China, despite the tension that there is in the Middle East. So it's what I initially said about the OPEC plus cuts, that they help oil, the fact that there is increasing demand in the world, and the fact that we have vaccinated programs that they are positively developed, and that helps the sentiment and that boost oil higher. So technical now, just to finish, we have seen that, as I said, it broke 60 territory. It broke even, this is the 1 hour chart, guys, okay? It broke last week resistance at 60, 90, 61, let's make it round number. Okay, so extending above it so far today, okay? So if I zoom out of it, you can see that it exited last week resistance, and Tuesday's resistance as well, and Wednesday's resistance. So it's moving above it since then, above 61. even retested 62.20, flipped lower because it was overbought, flipped slowly lower ahead of the jobless claims today, but it managed to sustain as a part above pivot point. So, for the time being, in this 1 hour chart, the oil is neutral because fast moving average, sorry, let me clear a bit this mess. Fast moving average have flattened. The asset is moving sideways the last 3 hours on the 20-day moving average, so a bit neutral for the time being. However, the fact that it managed to sustain and move for the whole day above pivot point sustains the positive outlook in the near term and in the long term for oil. Okay, you see, MACD is still positive. RSI is above 50 despite that pullback that we have seen earlier. Stochastic also sloping higher despite this pullback that was temporary and rebounded away from pivot point. So we have consolidation in this 1 hour chart as long as we don't see a cross of the 5 moving average above the 9 moving average. Okay. But we have also an overall bullish outlook in the daily chart as well, and you can clearly see this with the MACD extending to the upside, RSI at 80 territory, looking a bit overbought, but it still sustains a rising slope, so we might see a bit of a decline as a correction and another attempt to the upside. So overall, the oil sustains a nice bullish outlook, okay, because of all the things that I just explained. The OPEC plus cuts that helps the oil, the rising demand that also helps the oil, sorry, the expectations for rising inflation, also the fact that the vaccine programs are here and they point into an economic normality soonish. So all these are boosting the oil. Now, last but not least, Bitcoin. Big spike this month. It benefited 350% higher since last year. Big jump. So Bitcoin retested earlier the 52.50 territory. 52.50 territory in the midnight. A slight pullback since then, but it sustains a move above pivot point so far today. So a break of the 52.597 could keep the Bitcoin further to the upside, with next near-term resistance on my Fibonacci extension. So that brings us to 55,200, second resistance of the day, and also the 138.2 Fibonacci extension, but also the nearly 60,000 level as the 161% Fibonacci extension is pointing out. Near-term support holds at 48 territory. Is really these highs that we have seen in the beginning of February, coinciding with the 9 exponential moving average. So yeah, this is the near-term support, but as long as the asset doesn't turn below at least the 43,000, the overall outlook remains positive. Okay, so it's well above its 20-50 moving average, strong momentum momentum, positive momentum in the daily chart from MACD and RSI. So there is nothing really that points into a reversal anytime soon. Just corrections on a long-term rally. So guys, I need to call the date. I'm quite tired. Hopefully I replied to all of your questions. So the data today, as you have already, we already discussed, were negative. So we're added pressure on the dollar. That's why pound kicked further to the upside already at 139.85. Broke the third resistance of the day, slightly lower but above the second resistance of the day, so it needs a pullback in some kind of a correction, but overall remains positive. So this looks to be just a correction. This pullback looks to be just a correction. So dollar weak, all the major currencies are strong except yen, that is also slightly lower today. Sorry, that is overall weaker than dollar. So yen is the only one that that is weak against dollar. Aussie strong, New Zealand strong. A bit of a flip on the last hour. Not sure whether something is going on, but I think not. Yep. Commodity currencies, dollar cut benefits on oil rally as well, so remains at the low territory of 2 years, more than 2 years time. Stock markets, US equity markets like Dow Jones over here, S&P 500, Nasdaq, sorry, this is Nasdaq. They are weaker and they keep extending lower in the US Open. And this is, as we said, is the pronounced rally in treasury yields due to the reflation trades. So US equities lower, tech companies lower as well. They have outperformed during the rally from the lows last spring, but now they are. We have seen a bit of a dip, maybe due to the reflation trades, maybe due to the profit-taking situation. So that's the case so far. So oil higher, dollar weaker, US equities weaker, dollar again up, copper on a rally, palladium on a rally, gold found some floor but overall weak, and pound the biggest gainer so far today. So I need to call it a day. Thank you very much for attending our live analysis. And hopefully I'll see you again next week. Thank you very much. And I don't know why my screen is suddenly blurred a bit. Hope you are having a great day ahead and see